We all have dreams, don't we? Dreams of success, financial freedom, building something of our own. For Mark, it was opening his own custom furniture workshop. He had the skill, the passion, and a vision. But like many dreams, it needed fuel. And that's where the temptation, disguised as opportunity, first appeared. Mark had tried traditional banks, but his new business lacked the track record they demanded. Frustration mounted. Then a flyer caught his eye. Fast funds, easy approval. It was a high-interest, short-term loan. He needed $50,000 to get proper machinery, rent a larger space, and launch his dream. The loan officer painted a rosy picture, glossing over the astronomical interest rates and hidden fees. It's just a bridge loan, I told myself. Once the workshop takes off, I'll pay it back in no time. For a few months, Mark felt invincible. The new equipment boosted productivity, and the larger space attracted more clients. He was finally living his dream. But the payments, they were relentless. Each month, a significant chunk of his revenue vanished. He started dipping into his savings, rationalizing it as a temporary measure.
Just a few more big orders, and I'll catch up. I just need a little more time.
The temporary measure became a permanent drain. One missed payment led to another, each carrying steep penalties. The loan company, initially so friendly, turned cold and aggressive. His focus shifted from craftsmanship to survival. The quality of his work suffered, and client satisfaction dwindled. The stress began to fray the edges of his personal life.
Mark, what's going on? You're never home, and you look terrible. Is it the business?
Just a tough patch, honey. We'll get through it.
Mark fell into the classic debt spiral, taking out more loans just to service the existing ones. His credit rating, once pristine, was now in tatters. He started selling off his workshop assets, piece by painful piece. The dream was not just fading. It was actively being dismantled. He had to make an impossible choice.
I'm so sorry, David. I can't keep you on anymore.
The workshop, once a symbol of his ambition, was gone. The furniture, his passion, was now a painful reminder of what he lost. The strain became too much for his relationship with Sarah. The constant financial pressure, the secrecy, the broken promises, it eroded everything. He lost not just his business, but his partner, his friends, his sense of self-worth.
I can't do this anymore, Mark. I don't recognize you.
Mark hit rock bottom. With a destroyed credit score and a tarnished reputation, finding stable work was incredibly difficult. The once ambitious, optimistic entrepreneur was now a shell of his former self, haunted by the what-ifs. The bad loan didn't just take his money. It took his future, his confidence, and his peace of mind. Even years later, the scars remained.
Every decision, every rejection, every late night, it all came back to that one signature, that one desperate gamble.
So, what can we learn from Mark's devastating journey? It wasn't just bad luck. It was a series of critical missteps exacerbated by a predatory financial product. High interest rates and fees. The true cost of the loan was astronomical, making repayment nearly impossible. Lack of a solid business plan. Mark's initial plan didn't account for slow periods or unexpected costs. Emotional decision-making. Desperation clouded his judgment, leading him to ignore red flags. Poor financial literacy. He didn't fully understand the terms and long-term consequences of the loan. Lack of a safety net. No emergency fund meant any setback immediately became a crisis. Don't let Mark's story become yours. Here's how to protect yourself. 1. Research thoroughly. Always compare loan options. If something seems too good to be true, it probably is. 2. Read the fine print. Understand every single clause, interest rate, and fee. Don't be afraid to ask questions. 3. Build an emergency fund. Before taking risks, ensure you have a financial cushion for unexpected challenges. 4. Seek professional advice. Consult a financial advisor or business mentor before making major financial commitments. 5. Explore alternatives. Look into grants, crowdfunding, or reputable small business loans with fair terms. 6. Know your business inside out. Have a realistic projection of your income and expenses. Mark's dream was destroyed by one bad loan, but his story is a powerful reminder that financial decisions, big or small, have monumental consequences. Be informed, be cautious, and always prioritize long-term financial health over short-term gains. Your future depends on it. If you found Mark's story impactful, please like this video, share it, and subscribe to Capital Mist for more insights on mastering your money and building a secure financial future.